The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour. Me, your humble, lovable, squeezably soft koala bear of Wall Street, just sitting here minding my own business and watching the stock market move on. And, of course, got a little action out here, and I was hoping for this action up to 1935. Now we're going to have to see how the volume comes in. 2.4 billion shares as we start the show today. And, again, it's going to be very interesting to see what we have. This is probably the end of options rollover, probably in the next 30 minutes. So we're going to have to see how this market moves. As I said last week, I think we had a caller, and he said, well, what do you think is going to happen? I said, I think this thing's going to go up to 1935, maybe even a little higher. I think I said 1920, 1935, maybe even as high as 1950, something like that, and on the S&P cash. And then we're going to make the decision about what's going to happen. And it is a market that is pretty much Fed-driven. I've got a little sound clip that probably explains it better. I wish I had just a whole week where I had people doing my bidding, and I didn't have to do anything. I could come up with nice, snappy lines. Always reminds me of that, I think it's in Patent, where Patent tells the priest to come up a real nice, snappy prayer so that it won't snow and the sky will clear so he can get air support. And I would like to have it all just clear and not have to do anything. I could come up with some nice snappy lines. I occasionally do, but I don't have a lot of time to sit down. I've got my ideas, but I don't have the time to, like a stand-up comedian, hone those words. And certainly if I was on a big infotainment cable financial show, I would probably have to spend the time, maybe spend up till 2 o'clock in the morning, or hire wonderful writers. But I'll just diverge and maybe I'll get my point across. Hard to say. Anyway, we are up at 1936. What did we get? Is this the high a day? It looks like it's going to close. Let me update my stuff here. Yeah, within 20 cents of the high at 1936.71. Yeah, we were about 20 cents higher on the S&P cash. So we're going to have to see. Now, of course, we came down on about 4.5 billion shares, so we'd need another couple of billion before the end of the day. But it's not uncommon, like I said last week, is you have the first move down, everybody gets short, and unfortunately, everybody shorts it all the way back up. And in the morning, they short it, they cover it in the afternoon. The next day comes, they short it in the morning, have to cover in the afternoon. And the market can, even a bear market can ratchet up fairly extensively. And I'm kind of a little bit surprised about how much it came up today, but I think most of that, or a lot of it, is Apple. And we'll get into that in a moment also. But you can always contact me at 877-927-6648. I am at my palatial estate today, so you can email me at path@tfnn.com. Yesterday we went on about Fibonacci levels, and we're going to kind of revisit that. I had a few questions and emails. And for those people that did get and request the article yesterday, maybe you can email me back and say where the strength and weaknesses were in my article, because I want to go back when I have more time. Like I said, I never have enough. Go back and look at that again, because I think it's something that I want to work on a little bit more and flesh out to a bigger idea and maybe an article. But I know it's not totally distilled. Kind of like my brains. I think my brains, till I was about 30, they hadn't congealed either. But I think that they're pretty good right now, very congealed. But I digress. Anyway, today in 1910, a massive explosion destroys the Los Angeles Times building in the city's downtown area, killing 21 and injuring many more. The Los Angeles Times publisher, a big opponent of unions, believed that the bomb was directed at him. He hired and of course, this is before the FBI really got into high gear, hired the nation's premier detective agency, Burns, to crack the case, and he did. And it was the unions, and they tracked them down. It ended up being a case that went to court with Clarence Darrow, and apparently both the prosecution and the defense were openly bribing everybody in the jury box. The whole thing went down to the wire, and finally Clarence Darrow had done his own investigation, hired his own investigators, and actually found even a ton more evidence that these gentlemen that worked for the unions were hired by one of the big union goons to come after him. And this wasn't a case where this publisher could cut their pay or do anything else. He was just putting opinion pieces in there and also talking about the brutality of the unions in 1910, and that they were more than willing to kill people, in this case 21 people. And, well, the two guys that actually placed the bombs went to jail for the rest of their lives, no chance of parole, but escaped the death penalty, the electric chair back then. And it's a very interesting case. But we always think that terrorism and people placing bombs is all new, and it just came around. It kind of comes and goes. I don't think there's a whole lot new in what's going on in the world. It just we tend, I guess, to have extremely short memories in this world, and that's it. AKRX breakout from well, we talked to the IBD lady last night. At least someone's saying so in the den, but very interesting. Anyway, interesting for a number of reasons, but you can always check it out on this day in 1910 from history.com. Options are rolling over. As I said, we're probably getting extremely close to the very edge of options expiration. If the markets failed here right now, I would be very, very interested and probably take a short position. But I suspect that normally on these retraces, I want to wait, and if I wanted to short it right now and I had a 5-minute chart, I'd probably wait for 15 minutes before I pulled the trigger. If I was thinking about a daily, which I probably am, I'm going to wait 3 days and probably on Friday. And if I thought of on a weekly, it's probably 3 weeks from now. But I think the daily is probably telling us the true story out here, and that is that there will be massive, massive resistance from these levels above. The bulls were lucky enough to catch a bunch of people with extremely weak hands, as the shorts normally are. You have to be pretty darn right to be a short and make money. The market's only going down about 25% of the time, up about 75% of the time. So if you want to be a hero on Wall Street, be continuously a bull. And most people don't fault you, because if you spent 3 years saying that they gained money and then 25% of the time giving it all back, people kind of, I guess they think I think they know that it's the big con is on. But we're going to get to the reason that the big con is on, and whether or not we're going to have a 1929 kind of crash in the markets. And I think it is no different than 1929. We have a decision point here with the Fed, and we'll see if the Fed did exactly what it did in 1929, or if it's learned anything from its positions here. I think that we're so close to elections now, that all they want to do is keep this market from cratering between then for the political issues. And then after that, we may have something else. But I think the individual positions in some stocks may be incredibly ripe by the end of the day and over the next 3 days into the Friday's close. So we'll look at that. Somebody asked me about the Russell 2000 and Confluence, since we nailed it so well at 104. And when if you go back and look at the charts on Confluence, one, this is a shorter confluence area that I'm showing here on Tiger TV. It's also much wider. I think the one that we were showing was maybe 30 cents down just below $104. And when you get those over extended periods of time, and they're extremely narrow like that, that we had a Gartley pattern set up exactly the same way, tells me that we probably are in the B to C leg of an ABC. And, of course, everybody got short probably too late. They're not getting squeezed out. And you get these hyperextended moves in in bear markets. And it's something I guess you just have to get used to. I have. And the thing is to stand back, let the market come up. Eventually, the volume will turn to dust, and that's when you would pull the trigger. Now, on the IWM, one of the reasons I wanted to get out at 109 is this huge consolidation range, and that is normally a range that you get a huge amount of chop, and it's very unclear of whether or not it's going to go through that. You can go up there and bounce around for weeks or days. It can fail immediately. This is not a good consolidation zone to put your money on. What it is, though, is a good idea to probably get out if you are playing the bounce before it gets into that area. But yeah, if we could get another point higher today, in fact, what did we get up here? I made this chart earlier. Okay, we were up to 110.38, so a little few more times. We're right up against the bottom of that confluence zone. And again, that confluence zone is probably not going to act like a wall as much as fog, where we're kind of trying to make our way through and feel our way through, instead of have a clear, definitive idea that I could put a short on it with some individual point and see it happen. We had plenty of volume down there at the lows at 103.54, which gives you a good indication that we are probably in the next 60 days going to test that again. And I think kind of the lack of juice out in the IWM today. What do we have for volume? To 27.5 million shares. That we had 110 million down at the low. Good bottoms are not made from lots of interest. They're basically made with a whimper, not a bang. And my guess is that the best case scenario would be for a test of 103.54 again, and by the tiny stocks down there at that level. What else do we have? Okay, we talked almost the entire show yesterday about Fibonacci numbers. I got some responses, and again, for those people. Got going to break here in a second. When we get back, we're going to talk about why those particular numbers probably work. And again, I don't think they're magic. I think they're human nature. And we'll give an example of that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we're back, pretty much same, 1936 with 2.54 billion shares. Yesterday, we spent almost the entire show talking about the truth about Fibonacci numbers. I think that they gild the lily a great deal for something that is beautiful to begin with, which is what gild the lily means to begin with. But some people ask me, well, why do I think that the proper placement, for the most part, is somewhere around that 382 or the 618. And I said, well, it's kind of human nature. If I went into a room with 500 people and asked them all privately, so they couldn't hear each other, just put them in line and said, okay, in the next 2 seconds, give me a number between 1 and 10. Well, 42 to 44% of them, if there were 500 people, plus or and you'd be right 90% of the time to say 42 to 44% would come up with a number 7. The next biggest number would be 3. If you went to Asia and Japan, that number would be 5. Culturally, there are some absolutely huge numbers that come. And not surprised that 3 is kind of close to 3.82 and 7 is kind of close to 618. Interestingly enough, there are street magicians, kind of like The Mentalist, if you ever watched that show, where he uses psychological tricks to move people around. When he goes out in the street, he'll ask them between a number of between 1 and 100. And about 30% of the time, he's going to get 37 from the people. He does it a little bit more. He says the number between 1 and 100, and both digits are odd, both digits different from each other. And guess what? They get 3 and 7. Human nature is not mystical, but it is cultural. And like I said, if you go to the Orient, you're going to find out the number 5 pops up a lot more. Not uncommon that we use the numbers 0.382, 0.5, and 0.618 for the original Fibonacci, and not the derivatives like confluence levels and Gartley patterns. Those numbers come awful close. Now, let's start asking people to give me 3 digits and see how close they come to 382 and 618 over time. And actually, they come fairly decent when they even go to that. So I don't think it's any kind of specialized thing. It's lucky number 7 tends to, I think, be in a lot of people, the back of a lot of people's minds. Taking a little cash early at a 618, probably not a bad idea. Going a little long on 382, also probably not a bad idea. When you get a bounce, if you're really going to get a bounce, it's probably going to be more than 25 or 30% of the previous move on average. So not a bad bet either to move that up above 3 to 382 because even dead cat bounces get that much. So not a bad idea to go those. And there is at least psychological and empirical testing to show that people do have favorite numbers. I think it takes it a little bit farther to say that somehow deep inside of us we all are calculating that number already. And like I said, since there are some cultural differences out there, and 0.5 retracements in Japanese stocks come up a lot more than they do in the United States. But same thing. They give gifts in number 5 because they believe it's lucky. So, yeah, I'm not a big magic fan out here. I think it's just human nature and some cultural references. Amazingly enough, the smarter the people on tests and whether they're college educated, the more that they're likely to select 3 and 7. If they're dumb as a rock, they tend to pick other numbers, which is very weird. But might tell you a little bit about cultural references, and especially people that spend a lot of time in educational facilities and higher education, picking 3 and 7 over Joe Six-Pack with his beer, watching TV, and the Price is Right. Like we said, culturally, 50% retracement comes back in. I don't know if we have enough Asians in the United States that really matters. But those numbers do come out, and they do just leap out as this nice chart I show in a sample of 500 people. Number 7 is monstrous out there, and close enough to 618 that I think it says take your money early. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we come back, a lot of people, I guess a couple of people IM'd me, but also sent me email where these tests came from. And they've been going on since the about 1948, 1950. Bell Labs started the program to replace the dial phones, of course, with the touchtone phones. And they started doing tests early on and found out this popped out early and has become part of a battery of psychological testing for a long time. By the way, if you get somebody that picks the number 10, watch out. They're probably a serial killer. Watch out. The least picked number by far. Anyway, interesting ideas about why we use these numbers. But again, you can go back to yesterday's show, and of course, looking to hear back for all those people that got the spreadsheet and started playing with how Fibonacci numbers actually exist and come. Culturally, humans. Okay. Did want to get to Ilarion before we get into a lot of charts and discussions out here. He was on CNBC this morning, and I'd say probably if I got 30 seconds that was something that you could actually use, it would be a good day on CNBC. And I'm trying to distill a little bit of that for you. I tend to watch it in high speed and watch the closed caption, and maybe there's something I want to watch or listen to, I will. And this one kind of stood out fairly early this morning. In fact, I was playing this, I think, at lunch and just zipping through it. And I said, yeah, that is kind of interesting. Let's go back and actually listen to it. And probably one of the most useful ideas about the way things are working. And I've been reading a bunch of history books about the early days of the stock market, at least 1900 through 1940. And reading a lot and watching a lot of 1929 and how the Fed was actually interacting with the stock market at the time. But this runs about a little less than 30 seconds, but pretty interesting out here. So
what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous. Right.
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry
don't like
about
down
financial
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
And pretty good idea. But I've always said that the markets were manic depressive. They were either good getting better or bad getting worse. And it's almost a sideways market. Why would you be in it? You can't make any money. I guess you'd be in it if you were selling puts and calls, and maybe you could find some buyers on the other side of that. But again, the VIX is going to be awful low in a market like that, and you're not going to make much money there either. So what happens? Well, going back to 1929, probably, I think it was in, I'm going to go back and look at this again, but I think it was in June or the end of May of 1929, the Fed came out, started talking about gigantic bubbles, and there was a huge mini crash in the market. And everybody threw rotten apples and fruit at the Fed. They were talking and getting death threats, and they backed off. And I think that's probably why throughout history the Fed has never been early in pulling cash out of the market, or accommodations, as they say. They've always been late because they basically continue pushing up a market, and eventually there's nothing they can do, and it breaks hard. I can't tell you just how far down I think this market would go, but I think that we could easily see somewhere of a 30% pullback as interest rates go up next year. No matter what they say today, I suspect the only thing they are doing is trying to, kind of like a football team that's ahead, all they want to do is run out the clock until election times and the politicians get off these guys' backs. And what do we got, about 10 days left? And I think that they're already having problems holding this market up. And they may not be able to even make it to the election time. And I think we've already got some states, like I think Florida's already one of them, where you can start voting. And it doesn't look good for the easy money crowd right now. It looks like fiscal conservatism is going to be at least somewhat back in style. And, of course, if you're in a bubble, that's the worst thing that you can do to someone who loves a bubble, is say that at any point we've got something like that brewing. In fact, everybody tries to run those people out on a railroad. The people that are most honored right up until it breaks, like Greenspan, are the ones that enable it the most. Anyway, I think that's all I have to say on my news this week. We're going to look at some of the other stocks that have been moving and are moving out here. Of course, on earnings, we had Apple moving. What we're really going to be watching is this 101.75 level, or at least what I'm looking at. It is over that level at this moment. 102.34 is the last tick with 75 million shares. Of course, what are you really looking for up here? You're looking, you certainly got the volume already. And it did go into that 103 area, which is the some of these big bars. if you want to say that we're going into the candle of September 3rd that had 125 million shares down, certainly back into that. And, of course, is that right? Or did I just do that a little while ago? To Apple, 75 million shares. Okay, so maybe this is a little delayed on the volume. But, you've got to basically break that bar with 125 million shares, or we have a good opportunity to find a massive rejection up here at these prices. I dislike the way that the CEO talked about his sales, kind of the same way that they talk about everything, and that is demand is off the charts. Well, does that mean that it's 2% higher, 100% higher, 50% higher? It doesn't matter. Just shut up and sit down. And that's kind of the problematic. And I think one of the reasons why the earnings was kind of received with a giant yawn yesterday after earnings. We have popped up to about 100, but that wasn't much of a pop for this stock, where you might have had a lot of people short thinking again that it's going to go down. One of the reasons why I think we might see the indexes top off on Friday is now that we've had the bust here, we've got about 3 days of margins for people to get margined out, and maybe it doesn't last till Friday. But if we are going to probably crack, it's going to probably be in the next couple of days. And again, I'm going to have to watch the volume at the end of the day. Probably a little bit too early to think about shorting the markets right here. And again, I would like to see a nice little spike, maybe even into the close, and see the volume really tail off to see us doing that. Other stocks of interest out here, CMG, the perpetual darling of the market, that basically they took these guys to the cleaners over the last week while everything else was falling apart. They ran pretty heavy short interest out of this stock, and even into yesterday. But we are down on heavy volume, and this may be another good indication that we are at market highs. Basically, the stock gapped up on, July 22nd with a 2.2, let's call it 2.3 million shares. We're coming back into that gap now, 1.6 million, 1.7 million shares now. So you only need about 600,000 more shares before the end of the day before you're going to get into that gap with at least the same amount of volume. And what do we got? 1.7 million shares now. This one is another one you want to be watching. I think Apple and CMG out here. Of course, we had McDonald's come out, and they, let's see. MCD. They dropped the proverbial Baby Ruth in the punch, but it kind of opened up a little bit lower, kind of moving back up here a little bit. One of the better looking stocks, and I suspect if the market starts pulling back, we're going to see some people. Now, if you want to see a very good idea of how to set up risk reward in a trade, this is kind of what I'm looking for in confluence levels. You had a nice move out here. You had a little bit, you had a nice reaction, but you've got a fairly nice setup out here where you're going to know that you've got extremely strong resistance levels on the way back up in McDonald's. So if the market starts coming out and down and people start flooding back into this as a trade-off risk, thinking that they could park their money in McDonald's to be safe. You don't have that big of a bounce, but you do have a fairly decent one, and that would say that McDonald's would come back up to somewhere between $94.26 and $94.86. So you've got a fairly decent confluence range here, and what you really need to be doing is looking at these stocks, setting up confluence levels to really start looking at your risk reward on this bounce. And could we get back up to that level before the general market rolls back over and takes McDonald's even two with it? As I don't think there's going to be any safety trade if we do continue down in this market. But interestingly, not the only stock out here getting hammered. Of course, KO, this one blew apart. We talked about this one yesterday. And I said you needed to watch out for this one because it was basically a false breakout to the upside, especially through the worst parts of last week. Did even find a little bit of weakness out here. Of course, it went right back to where I was talking about on yesterday, and it's blown through it with volume. So on Coca-Cola, that $40.50 we were talking about yesterday just blew it away, which means that you've got the $39.06 open from the August 1st low out here. My guess is that you've got about a 90% chance that gets tested, and I bet it gets tested in the next week. We've got a little doji out here, actually, that could say that this is just half of the way down on the Coca-Cola company. They've also made some comments that people did not really cotton to. I always like that word, cotton. Yeah, Apple subscribes to the P.T. Barnum School of Marketing. Don't say too much and keep them stupid. But it is, I'm a real specs guy, too. So when I see a lot of flummery, yeah, I guess that's a good word. You don't hear it often. Flummery, flowery discussions without a lot of details. That's the first thing that I start to balk at. Anyway, Coca-Cola Company said something that no one liked, and that is that they are seeing generational changes. The kids of drinking ages are hammering Red Bulls with vodka in it, and the ones younger are drinking less sodas and picking up other things considered to be more healthy. Maybe it's the moms out there, but this thing blew through, and of course you've now got $39.06 totally open out here, and I think that's the minimum you would look for, and would not be surprised if you get enough energy if this broad markets pull back. This thing's going to 36, high 36s, low 37, so we've got it. Howard Tab sales. I don't know. All I know is it gives all my... Tab and Mr. Pibb are the worst sodas because all you have to do is be around someone that drinks a lot of that stuff, and you know they are the most gassy people in the world. Nowhere to I forbid one of my friends from drinking it around me, and it did improve the situation markedly, as I would say. So, Mellow Yellow, there's another one. I know someone calls that... The elixir of the stupid people. I have to say it politically correct anymore. But interesting. Anyway, that's kind of what we're looking at here for earnings today already. Then we're going to look at after the bell tonight. Broadcom, so let's take a quick look at that. BRCM. This one, actually, I think we talked about this one last week, that it didn't look bad. I wanted to get this thing to get back to 33 on light volume to really give a good signal, but not bad at all. And, of course, I guess it doesn't matter whether phones are selling for a little less, as long as phones are selling. Cell phones, of course, they make a lot of chips out here. This stock had seen better days or more action. Qualcomm, the preferred chip maker for those phones, but Broadcom's still not doing bad out here. This thing gapped up on monstrous, huge volume of almost 50 million shares on the 2nd of June. I got back into it with 8.3 million shares. That's all you can ask for. I certainly wouldn't be short this thing. We'll look at where this thing could pop back up. Certainly looks like a trading range. We'll talk about it when we come back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. And it is interesting. Anyway, we got after the bell earnings. Some of these stocks have wildly pulled back, and it is interesting to see just what we have. And of course, a huge gap down on CRE. A lot of reasons. It's gone sideways for 3 days. I think it's probably a little too short. Could you see this thing bounce up on earnings just on short covering? And I think the answer is conceivably yes. And maybe this thing bounces up to 36, 37. You get light volume, maybe a trading range from 37 to 30 on it. So keep an eye on that for after the bell. We also have Intuitive Surgical. Talk about a manic depressive stock. This thing is always all over the board, always headline driven. I don't know how anybody trades the thing. I guess if you're a gambler, you just throw your money at it and hope it works out. But either up $100 or you're down $100. This thing has always moved on earnings, and I think there's no doubt on that. But this thing's probably going to either be $390 in the morning, or it's going to be $540 in the morning. And my guess is that this may be the last big hurrah for this company. And if it got up to 540 and you had the light volume, you might have the last top in this thing, maybe a nice complex move back up. But you might actually have somewhere where you could buy some puts on this thing if it did gap back up. So I'm going to be watching again that one after the bell. VMware. This one, really interesting company. And apparently few of the things that they've been doing hasn't been working out. I would love for this thing, if you are long, or want to get long, this thing would come back to 75 on light volume is exactly what you would like to be looking at. I wanted to buy this thing for the move up from that 70, 76 to 78 area. Pretty good indication that that's where you wanted to buy. I missed it. The general market conditions were so bad that I couldn't buy it. But a nice run up to 112.89 on April 2nd. And it is interesting to say the none least. But, this could be an interesting company if the market holds up back around 76, 78. And it will be exactly what you're looking at for a Wyckoff-style buy pattern on it. Yahoo also comes out. We could see some real movement in this one because it's a company that's priced at about $5 with $40 worth of Alibaba stocks in it. And that's probably not going away anytime soon. So if you saw a drop, it probably would be a drop even making Yahoo worth less than $5. So you probably got, $35 at a bottom on this thing. Could it squeeze some shorts and kind of popped up the last few days? But how much of that is Alibaba? How much of that is Yahoo? Hard to ever tell. But it is going to be interesting nonetheless. And, of course, we go into earnings again tomorrow morning, and we're going to see a great deal of stuff come out. Not a lot of big stocks tomorrow morning, so I think we're mostly going to be driven with what's going on tonight. A lot of smaller stocks. SLM in the morning, maybe a little bit. Yelp in the morning. Or no, after the bell. Oh, that's tomorrow. So yeah, after the bell tomorrow, Yelp. Not a lot of big name stocks. Tractor Supply after the bell tomorrow. We'll see you tomorrow. Same bat channel, same bat time. So when you can, not
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.